Yeah, they like that. I mean, I can't. That's what I tell you. Go. You want a car loan? Go to get a credit union. I swear, I've seen them actually offer car loan rates less than what they were doing in CDs.
Okay, we're back with another episode of Expandable, and I'm excited about this episode because it kind of gets just back to the nature of expanding with commercial lending.
Okay.
And that's the business you're in, you know? But I was thinking about this the other day, and I was thinking, you know, different loan products are made for different people, and they're generally lent by different financial institutions. And I don't think there's like, you know, people kind of know, well, you can kind of go here and get this and go here and get that. There's different layers in the market, but I thought we could talk about that from your perspective as bank CEO, and you're lending to small businesses of all varieties.
Absolutely.
Right? And you also have sort of a niche you like to stick with too, that you know well. So my thought is, you know, what kind of loans to expand go with what kind of banks, right?
Okay.
Now, let me tell you from my perspective first, I'm a consumer. I look out in the market and I can identify certain things like, okay, I want, you know, obviously I'm going to go to community bank probably because I can have a real conversation with someone to talk about the details of.
Yeah, but did you know about a community bank before we met?
No.
Okay.
No, but that's, you know, me and my level of whatever I know in market about, like, I want to expand my business and I need a building. That's how I think about that. But then if I think about a car loan, I'm not thinking about that same bank. I'm thinking about a credit union because I see, you know, friends and ads and however it comes into awareness that credit unions do good car loans. They're cheap, you know, and join a credit union, get a car loan, right? I don't have a car loan with a credit union, but I mean,
I don't anymore, paid off.
But I mean, yeah. So it's like, I'm looking at the market, where's my best value in the market? And so there's little, you know, different layers in the market of where you can get the best value. And so I'm curious, from your perspective, if you're looking back at the market from a lending standpoint, you know, how would you cut it up?
Yeah. And yeah, this will be based off of a lot of the local geographic Central Florida, because, you know, some banks that are national or regional in the Southeast, sometimes they act a little bit differently in one region or the other. But I think we'll probably start from the high level and go. So one distinction, you know, people don't know is what's the difference between a credit union and a bank. Okay. First off, credit union and bank. A credit union, it says member owned. So which means is if you have a checking, a savings, you're a member. You have to buy that like extra $5 or something you put in. Now you're a member, you're 100%.
Like Costco.
Correct. Correct. But on the flip side, they do not pay income tax.
Okay.
They don't.
The bank themselves, the credit
union. Yeah. They do not pay income. They don't pay federal income tax.
Okay.
So that's huge.
So is that advantage to me as the consumer or no?
You would think so. So on a business, you would think, are they offering rates, say 30% less because they're not in the 30%, 40% tax bracket of most, say, shareholders or owners of banks?
Yeah.
So there's always that huge struggle with that huge fight. You know, every year I'm a part of the Florida Bankers Association. And that's one of the biggest fights the main constant that I've seen over the last 20 years is the credit unions not paying income tax. Now, there's different sizes of credit unions. Like you'll have a Publix credit union that's dedicated to take care of Publix employees.
Yeah.
Fantastic. Take care of that. Now you've got Navy Federal Credit Union. Okay. They're not just for the Navy. BS. It's across the board.
Yeah.
They are
teachers, federal credit union.
They're billions of dollars institutions. So like you get that level, no, it's not fair. You know, a household of four is paying more federal income tax than that $1 trillion credit union.
Yeah.
So when you look, I mean, look who's kind of like advertising. You got Mid-Florida Credit Union is big in Florida. They're advertising on major stadiums.
Yeah.
So that's money they're just in a way. Is that, you know?
Yeah, it's marketing, yeah.
I've gotten calls to just put name on buildings in Volusia County, and they want 20, 30, 50,000. Like, oh, you remember your owner? So it's great. Like, credit unions piss away money in other ways. So and they're not good management of, they're not safe and sound. Like credit unions that have bought banks, they don't understand bonds. They don't understand this. They don't understand commercial lending to the fact. And so they're limited to the amount of commercial lending they do. And they're constantly trying to up that window to be higher than, I think it's like 7% of your portfolio anyways. But bankers are like, great. You want to get in that? Pay your fair share of income tax, be on an equal paying field. Right. And I agree with that, but nobody cares. if it's a small credit union focus that is just giving to that, we're focusing just on the teachers union. We're doing, whether it's just firefighters. Yes, take care of that.
Yeah, carving out a piece of the community, serving them.
Correct. So, you know, they're lying as the larger ones of, hey, we're here to serve this need and we're going to get, and they want to get into dealing with our, and also one of the big things is they want to take care of public deposits like municipality money. Oh, we want to take that. You're not paying income tax. So great. You know, everybody's paying real estate income tax. We're paying real estate in this building. And, credit union, now we want public funds. We're going to pay you, but we're not paying income tax. I mean, come on, guys. That's complete, utter bullshit.
Yeah.
Let's just call it out.
I see I've hit a nerve here.
Yeah. The large credit unions, you know, when you start getting into the ViStar side, and you get like, you're not paying income tax. But I guarantee you, if I'm going to go get a personal loan from credit union and another bank that specializes in credit unions, they're not going to be 30% cheaper. So what are they doing with that extra money?
Yeah.
You know, they're
So that would be
wildly, you know, so if you
sense.
take the average CEO price income of a credit union, same level of a bank, it is drastically different. So like, you know, I got some theories, but yes, they're fantastic on car loans. You know, I remember.
Why is that? Why do they kill on car loans?
Yeah, they like that. I mean, I can't. That's what I tell you. Go. You want a car loan? Go to get a credit union. I swear, I've seen them actually offer car loan rates less than what they were doing in CDs at that. And I'm like, that doesn't make sense. And I think they catch it later. And, you know, but ultimately, I mean,
like a loss leader.
I guess. I don't quite understand it.
They get people in on the car loans.
I don't quite understand that aspect of it. I mean, we haven't seen credit unions go under. Yeah. But they're also not held to the safety and soundness of, you know, FDIC insurances for the banks. Yeah. You know, they're under the NCU, National Credit Union Associations and everything. So they're not held to the same level whatsoever. Yeah. As far as financials. I think Costco, they're not held to that level. They're not held to this. And it's like, oh, come on. But it'll take a large one to go under, and then everybody's going to be crying.
Then Costco just needs to buy them. Costco needs their own credit union.
Yeah, no
that
kidding.
Makes sense. You get the card.
Walmart's been trying to get a bank for years.
Yeah.
I mean, yeah, so it's the same thing. But yes. And then let's think, you know, the first thing I think a lot of, let's just assume, you know, you're average American, you don't know banking, you don't have a friend that works at a bank, and you know,
you're just looking at the market.
Go to. Okay, great. You know, the first ones that probably pop to mind are the Chases and the Bank of Americas and that kind of thing. Yeah. So the Chases and Bank of Americas are going to be have a lot of consumer based, easy, should be frictionless things. Odd thing with Chase is they've really cracked down on, like, let's say your kid has an account there and they're in college and, they need a couple $100. You got to give $200, go to the local Chase branch. Hey, I want to put $200 in Lee Jr.'s account. They won't let you. It's like, okay. I mean, you know, so you got your problems. You know, they don't want to deal with cash on that. So the bigger banks, consumers, yes, pretty good services. Yeah. But you need help. You need to talk to somebody. You know,
it takes forever. Yeah,
that's going to dwindle down.
That, yeah.
You know,
so it's frictionless getting in. It's usually frictionless getting in. You can set stuff up real quick. They may even pay you a couple $100 to set one up. Yeah, and then you're in, and then you're
the truest. And yes. Now on a commercial level, let's say,
but you're saying for that part of the segment of the market, it's good in terms of however you define good, for a consumer to have a checking account with a debit card and
there's nothing wrong with
a savings account.
It's the same. I mean, really, let's think about it. It's the same product the banks are selling.
Yeah,
you know,
it's just
banks are always trying to really differentiate themselves, but you know, what's biggest? It's an account where you store your money that is insured, right, that you can make payments for your bills. Right. Okay, great. So how speed of it? Do you like the app? Do you like, you know, the small little nuances, but in generally it's, I'm good. You got a card, you want cash out, go to ATM. Everybody's got that access. We've got access. You can go to 50,000, you know, ATMs and take out cash free. Right. You don't have to have a branch in your area. But, you know, if that is in your conscience, like, oh my goodness, I could be locked in, you know, another part of the country and I need money. Well, there's a Chase there. Okay. If you want that, get it. But
but you can also utilize that Chase to get it from another bank too.
Yeah. You have no touch. And I think I mentioned this in another podcast, but like, there's some YouTubers that I follow that, they're sailing. They're sailing for runs. And their car got fraud because they're charging things in different parts of the country. And they're like, no, it is us. We did this.
Yeah.
I think it might have been Chase, but maybe not. They wouldn't allow. They said, no, you got to show up at a branch.
Yeah.
I mean, they had to fly from South America to a branch in Texas to say, hey, I'm here. Let's face it. I mean, if that was us and we caught a fraud and we knew them, we're like, okay.
Let's look at the other.
Let's think of other ways.
Yeah.
Like I'm going to tell you to go fly in here. Is there another way to validate your identity where it gives us a comfort level?
There's got to be.
Hey, how about I call you directly on the cell phone that we have on file here?
Right.
From her cell phone, let's FaceTime.
Right.
And compare that. I mean, you can.
Yeah. It's a human.
It's a human the way you can figure that out. That's going to, get away from AI. Great. And Haley, all right, I see it's you. I mean, if you had that relationship, the employee's going to know your voice. They're going to see that. You're going to spot, okay, hey, great, you're here. Where have you been? And you start talking about the places you've been. And in the meantime, you can look at the account history and be like, yep, they were in Grenada, they were in here and here. Heck, they have a YouTube channel, so you can actually see every place they've been and where they did the transaction. So it's them.
You might even subscribe.
Yeah, so great. So that ridiculous.
Hey, this is pretty good content.
Now let's say your automotive repair place, you've got a location, you've been renting for a while, you've saved up some money, now you want a $200,000 loan. Okay, so where the big banks come in the hand, is if you fit in their specific box of credit, and they're going to look at your merchant sales, and they're going to define things based on your credit. For business loans, they've got that tranche. If you fit in, you can do very quick approval processes, but it's going to be clearly based on history and credit. Highly,
it's a computer that's making decisions.
Correct.
Yeah,
and then the regional banks, say where SunTrust used to be the original, Truist, much larger, or, regions where you get regional banks, they may have a little bit higher touch, but then, the decisions are going to be done, North Carolina, Alabama, those are the headquarters for a lot of regional banks and major banks.
Right. Yeah.
And so it's going to go back there. So maybe you have to set an appointment. Someone's going to come from another branch. A commercial lender is going to come over and talk to you and set up and that kind of stuff.
Specialist.
Yes. Now you come down to the community bank. So, we've got, Surety Bank, we've been around since 1926, and you've also got Main Street. So one thing that's great about DeLand is we do have two community banks headquartered in DeLand, which I don't think there's another town in Florida that has two community banks. And to give you a relationship, when I started in bank in 2001, we had over 300 state chartered banks that were headquartered in Florida. Okay. Now we're under 100.
Oh, wow.
And we still have two in DeLand. So that's awesome.
Yeah, that's awesome,
So, you contact a Surety, you contact Main Street, you're going to have a local commercial person talk to you that knows the area.
Right.
And you don't typically have that of the greater. So that's that breakdown. You want something, if you're, a coffee shop you've had for years and you're wanting $20,000 real quick on, for a new espresso machine, $25,000, a big bank or online is going to look at your merchants, your point of sale, and do factoring and do quick, high rate, fast close loan.
Yep.
A community bank is not, since it doesn't necessarily have that merchant where they're controlling the flow of all your credit cards.
Yeah.
Will take a little bit longer time.
Yeah.
But, they're going to be a little bit more negotiable probably terms.
Yeah.
When it comes to that,
And it's good to think about, we start looking at all these things together as more of a strategy for a business owner specifically. When if you are in that, let's say you haven't expanded to a new building yet, but you're still renting, but you need that extra equipment. It's a good thing to go and start a relationship with the community bank there, because even though it might take a little bit longer to get that process going, now you're already starting, they're learning your business, and because when everything comes down the road,
character is a part of lending, Banks, when they're underwriting, they look at your history, what built up the character. Does that person have the chance to withstand a recession? What, are they honest? Are they? And so, yes, it does add, when we see you conduct your affairs straight, honestly, I think people always worry about, I run so much money through you. I've gotten people over the years I run $200,000 a month through your bank. Your average balance is $2,000.
Yeah.
that person that runs $20,000 through a month, but has an average of $10,000.
Mm-hmm.
That,
Yeah.
that's character. That's more than the other person,
Right.
So
it's not this razor thing.
Yeah. So, that plays in. So that is kind of the level. Now you want to start getting into, where the big blanks. Now you want to get into like major, properties. Let's say it's a 400 unit, Marriott, that's one of those areas. That is going to be then, community banks can do that loan. They're going to break it up amongst many community banks and participate and share that. And then super regional may be able to take that all out at once. And then you've got the bigger banks that, they can do that market. Yeah. So, we see metro areas kind of like Orlando to, and DeLand, like to where the bigger banks, $1 million loan in Orlando market, the bigger banks, aren't thinking too much of it because, they can do a $10 million loan just as quick as $1 million loan. Yeah. So sometimes in the larger markets, you're not going to get as much attention in a $2 million loan that you would in a rural area with that bank. So,
I mean, what I'm getting from this really, what's sticking out to me is that those smaller-ish loans, let's say, I don't know if there's a floor, but like say 200,000 to 20 million, right? That smaller-ish market, that's the backbone of America. Like those are all small business owners across America that are
no other country
operating.
Really has the smaller banks in the community bank framework than the U.S. does. It does not. So, I mean, that produces entrepreneurism. And the community banks, too, they did, if you look at total asset size, the total deposits are out there, out of, I'm going to get it wrong. There's like 3,600, 4,000 banks, not including credit unions. And, of course, majority of them are credit unions. But the top 4 banks are like 40% or half of the total deposits in the U.S. But out of all that, community banks did over 70% of the PPP loans.
Okay.
I mean, what does that tell you?
Yeah.
They're the ones that give a shit.
Yeah, and that's their customer, right?
That's not only that, 70%. So they weren't 70% of the deposits, but they did 70% of the PPP loans. Yeah. So they did all the big banks' PPP loans. While they were sitting there going to all their attorneys, like, how do we do this? How do this? You know what? The community banks were like, we got this. Yeah. Hold my beer.
Yeah, basically.
So they did that. And like I said, you go to other countries. Visited Costa Rica 2 years ago. And I was talking to a business owner. The guy was building the walls. He had the contract for Marriott on like 6,000 hectares to do the walls. And I was like, it's a pretty good contract. Yeah. So I was like, out of curiosity, do you borrow money to build this? And he's like, no. I'm like, why don't you? He's like, cost to borrow. He's like, if I borrow $100,000, they're going to want me to renew it and pay a couple points each year on it. They're going to have this, that. And I'm thinking, oh my goodness, I love to loan you money on getting the receipt of your payments from Marriott for building the, the beautiful stone walls in different areas and things you're doing. But you did not have that community bank. So even like on a 10 unit, hotel in the middle of the jungle, good luck getting a little loan. You better bootstrap that.
Yep.
So, but in the U.S., heck, we'll finance you. Oh, you want to buy a house and use it as an Airbnb? Boom. Community bank will finance you. You're worthy. So like those little.
So kind of as a tangent, I'm interested in that specific situation. Like, is that a case, do you think, where Marriott has a financing type of mechanism to their business? Because if they're opening up in these other kind of
countries, and
they're going to know, like, hey, we either have to fly people in, like contractors that have to bring their whole crew in.
I'm sure it's a mix depending on what it is and where they are.
I wonder if they actually do some financing in house just to make sure that things stay on track. It seems like there's an I've done some work.
They may pay them a little bit faster too, because like, I mean, here
that's true. Different terms. Yeah.
Well, it's like I was talking to my brother-in-law. He was manufacturing and did some work from Disney. They don't pay you for 4 months, or it was 4 months at minimum. So you kidding me? I mean, so if you've got a multi-million-dollar project over this 4 months, say you got 50 employees, you got to cover the cost of that 4 months.
I've seen that with government.
And then a week delay. Like, I mean, that's highway robbery. I wouldn't put an RFP out in anything to Disney. Are you kidding me?
Yeah.
You're going to wait 4 months, so you have to build in so much extra reserve to cover your
That's
butt
right. That's right.
in that 4 months. So like, I'm going to be a contractor for now.
Yeah.
Yeah,
there's an opportunity there somewhere for a middle, smaller sized bank to participate in those countries, because, as you know, I've done some work in like these type of countries, and when I'm there, I see the micro lending is a big deal.
Mm-hmm.
Like, it's all ironed out. They've got, like, the NGOs are a part of it, and it like they're serving that micro.
Yeah, they're trying to get it in micro, like, so
Right.
you have availability of a cell phone, and because that's your.
They've got that pretty much dialed in. But when you get above that to the guy you're talking about, where you're actually performing on a bigger contract, there's really no lending in place.
No.
And that's where you have. I've got some friends that are contractors. They've done projects in Dubai, and that's where, like, you bring the people from the States or Canada or whatever.
Community banks, and there is no separate charter for a community bank,
Mm-hmm.
but it just happens to be like, no, we're
You just fit
in this
that
industry.
market.
Yeah. I mean, to me, a community bank is, you have your area of, whether it's geography or your types of loans or your type of customers that you have an expertise in.
Mm-hmm.
And, and that is your community.
Yeah. Well, let's talk about to in this out. Let's talk about, like, from Surety's standpoint, like an ideal niche for you, or, and I know that you will lend to lots of different, or still a variety of businesses. You're not counting.
Yeah. Because ultimately,
you want to look at opportunities,
because it's a risk. We look at risk.
You look
So
at risk, yeah.
that is one difficult part of a community bank is, if I'm lending specifically to my local geography, even though you may have a mix of types of commercial property, whether it's office, apartment, whether it's, rental houses, retail storefronts, restaurants, so you can diversify the types of property in the region, but you're still then beholden to that region, because
that's right.
Yeah. A hurricane doesn't care about the types of property. So that wipes it out.
Yeah.
Then, everything's going to get rebuilt, but then you've got your whole portfolio. You may have to put a pause on it. You may have to give, a larger section of, either interest only, defer payments for a month or two until everybody gets insurance premiums and things get back to normal. So, you have that risk too. So yes, you look at diversifying even our loans with participations with, other banks, and be able to get that are, secured by real estate in other regions too, maybe in another state or, so
you're looking at risk on all different levels.
Correct.
To mitigate.
And within, what you should do, and there's guidance out there that the banks have there. It's kind of like a 3-1, they have a 300% ratio is of, you don't want to lend 3 times your capital to commercial real estate and vacant land.
Okay.
Sure, that's one of the things. Now, that commercial excludes owner occupied, which I disagree with that, because I think you're just as at risk regardless whether it's owner occupied or non-owner occupied, but that's another story. And it's a good rule of thumb. It's a good rule of thumb, because your exposure over 3 times your capital. So if you have, $100 million in capital, that means $300 million loans to vacant land and commercial. And vacant land can fluctuate the most when things go south. It does, and it's not income producing. So there's a reason why you don't want to overweight in vacant land.
Yeah.
And there's a reason why, commercial get hurt. You can do more than that, but you want to look at your portfolio and say, all right, we've got this much of commercial, and our average now loan to value is X. If we don't any more, are we comfortable at that 80% loan to value? We're getting exposure. Maybe we shouldn't, like, future loans, since we're exposed too much in this sector, be at 70%, 75.
Yeah.
Maybe we should increase our debt service coverage ratio.
Yeah. So you're looking at it.
So maybe we're like, okay, we like the sector. It gives a pause to look at, do we see any trouble in this sector? Has anybody 30 days past due? Is anybody 45 days? So,
you're looking at it all.
You analyze that, and you say, okay, we have a concentration in commercial real estate and vacant land, but here's our historical, here's our loan to values. We're comfortable going forward higher, but we're going to tighten the reins over here.
Yeah. Yeah.
That's sound business management. So those guidances, aren't bad. They're just telling you to look at your portfolio and manage your risk, and So
yeah, that's good. Yeah, that's a good way to wrap it up. And so what you're telling me is, if I want to buy a car, I need to go to a credit union.
It's go to it. I mean, it's great. And pretty much now everybody's embedded. But here's what you do have to work out that everybody knows. Okay, so when you go to buy a car dealership, of course, typically now you're not going to the credit union.
Yeah.
You can call your credit union or bank ahead of time and say, hey, what are the rates? Are you a part of that? So, there's software that all the dealers, their finance people are on. And so when they plug in your income and your credit, all of the banks and credit unions pop up.
Yeah.
And so if you've bought a car recently, they'll be like, oh, well, so-and-so go to give you this rate. They're picking and choosing. They're not necessarily telling you the cheapest rate.
Well, they're trying to finance
because they get
in-house,
paid.
right?
No, they do it out. They went outside, but they get paid on the back end too.
Oh, okay.
So I can be on Dealer Track and say, okay, rates right now, we'll do 5% and pay the dealer 1%, or we'll do 4.5% and pay the dealer 0.5% or something to that effect, whatever we have. So sometimes, they're looking at what's best for them.
Yeah, of course. Yeah. I don't like going to dealers.
So the last time in a car, I said, oh yeah, that rate. Well, first of all, do your research ahead of time, looking at rates, and generally, okay, well, I know that reason, go ahead and call Vice Star ahead of time, or go ahead and call them, hey, what's the rate for your credit? Now your credit though. I mean, because things change, I think I'm going to get that. That's why I hate when somebody asks me, well, what are the rates? It's like, there's so many variables, and what you tell me doesn't mean that's actually true. You may believe it, but your credit's going to be completely different than what you say. And, very few times that people tell me how strong they are actually that strong. So I just, okay, here's the range.
Yeah. And there's so much information out there. You can get pretty close on what it's going to be before you.
I get excited when I do a loan interview, but it's always, okay, great. Sounds great. Now let me look at the facts and let me sit down and spend time analyzing it for ourselves.
Right. Cool. All right. That was good. We'll move on to the next one.
All right.